Thanks again for coming. And let's take a quick look and see what is going on here. So quite a bit is going on, actually. Let's take a quick look at the S&P. This is just the daily chart, or of the, that's gold, sorry. There we go. There's the daily chart of the S&P. So, the S&P is being very coy here today. It is not in the worst position. It's not in the greatest position. I know what the normal posture for the market is coming into, say, next week. So we still have some time, and that's maybe why they're able to kind of float here for a little bit. But normally, the S&P wants to move lower into early next week. But that isn't necessarily going to happen here. We have a very powerful up move underway. This is the weekly chart. And if I go to, this is one way to view the weekly chart. I have a preference to view it with no continuation and making it a front month. That way you don't have that gap that's there. So this is the weekly chart as I prefer to see it. Because that gap is there on the weekly chart because of the ending of the old and the new being at a different price. But for some reason on the continuation chart, it's not being stitched together. This is a more real chart. A continuation chart is a less real chart. Still works, basically, but particularly around the times when contract rollover happens, there's going to be a stitch on your continuation chart, and it'll often show data that it's not real. The market actually didn't do those things. They had to put those things in to put the stitch in so that you have one uninterrupted string of the market just moving along. So this is my preferred way to look at the weekly chart. Going back to the daily chart here and so on, we're just kind of hovering at pretty important levels. There's a lot I could go into here. This is stuff that we say for our people that are subscribers, clients, and so on from around the world. But it is critical. They're really kind of hiding their hand here before they show what's next here. If we're going up, it's a whole bunch higher. If they're not going to go down into early next week, it's a bunch higher. We've already given out all the prices and so on. There are people who believe the market's ready to have a crash, ready to do something like this. And I do not see that in the cards here at all. So there's some people on the internet that are promoting that idea. This is great that they're putting their forecast out there. But I do not think that that's likely going to happen. And there are things that happen in the market that I may not think are likely. So, I can't be 100% certain, but I'm pretty darn certain that that is not what we're going to see. But I do know what the normal positioning of the market is, and we're just going to have to wait and see how they're going to play this out. So I don't have as much time today because I want to be in for when the market starts moving again here. But we do, there's a lot going on. If you take a look at here's a half-day chart right here. This is the first half of today, and now we're in the second half of today. So the normal posture for the second half of today is actually lower. I mean, I would draw it in something kind of like, that's like the normal posture for the second half of today. And worst case, maybe the first half of Monday, if they don't do it today. But they're floating pretty well above important levels here. We'll see, and I'm just drawing in the sort of the wick of the bar here by doing that. That's kind of the normal posture, but they haven't done that. The low in the second bar is nothing yet. I mean, it's down at 45.08. We did it 1 unit early. We got down to 93.25, but not not down to a little bit lower. And maybe this is all they can do. Maybe they're so strong that this is all they can do, which would then indicate the market's really in a position for substantially higher prices. So it is critical. They're at a critical juncture here on the day. And we're just going to wait and see what they show us here without getting too frenetic about it. And then we'll put something together as they continue. So I wonder what is on your mind today, because I do want to get back to it with everybody, and I want to also see if I can be of some help to you in any way, whatever that is, even if it's just listening to anything that I might say. Anything new for soybeans for the close of the week? Yeah, I have to do some work on the weekend for soybeans in order to get us into position for another move. Soybeans has been, we actually did buy soybeans today. I mean, somewhere down here I have a little notes that I put out, and here's, so you see where it says soybeans here. We did do something. They're already almost up at the level. We bought it this morning saying that soybeans will trade at $17.17 at the latest by Tuesday, March 29th. So when we bought it, they were at $17.11. And so now they're up at $17.13. So we're almost already at $17.17. It's no big deal. What I'm really, and I'm happy to have a trade, but we're really trying to put together a better, bigger picture and smaller picture for this market so that we can really do some more trading with it. But that's at least what we gave out for today, to buy it at $17.10, $17.11 for a obviously very small move up to $17.17 into Monday or Tuesday. So thanks, Rob. Samuel Cerny says, hi, David, any update on crude? That's another one that I'm going to be working on over the weekend to get that more organized so I can be much better positioned. I mean, there are some things that are happening in crude, but that I think are important and we think are going to happen. But I want to go beyond that, just that one indication. So this weekend, I'm going to be spending some time here at the office, and I will be speaking to people this weekend, just those of you that are thinking about coming to the Square Principal on June 25th. Every weekend I come in the office and I speak to people who are students of the Square Principal, and they learned it from me, and I'm here to help them utilize it, and there's no limit to that. I come in every weekend to speak to people, anybody who has questions about how to use it or what we're doing with it or how we might have made a call using it and so on. We do get questioned a lot. Some of the questions that people ask are related to how do we know that the market is going to go way up here when there's like supposedly resistance here at an old high. How is the Square Principal telling us that the market's going to go way up here? And there's a very good answer to that question. And I'm going to be talking about that and teaching how we do that on this weekend. So if you end up coming to the Square Principal seminar, you'll be able to get all your questions answered as well. Stu is here and he says, hi, David, what do you see for gold since it could not hit its second target of 1975 to 77? I am not 100% sure, to be honest with you. We got out of our position when the market was at 67 the other day, actually 66 to 67. The swing high was 67.20. We exited as I went into the meeting saying we got the goodness out of the deal. The only thing is that there is still a possibility the market will move higher into Monday or Tuesday. So we're flat. We went long on the daily close here above $1,920. We took some off at 57. We took the rest off at 66, 67. And now we're waiting until Monday. If the market is going to go higher, if it is, and we're not really saying for sure it is, it's going to do certain things to show that. And then we would be able to go long for the completion of that, perhaps, this 75 and so on. So that's basically it. If we end up coming down some into Monday, that also will provide potentially an opportunity for our next trade. So that's what we're watching for. So there we go. Thank you, Stu. Connie's here. Any weekly or monthly top in crude? Well, there's larger tops than that in crude that are in the process of being made right now. I can't go into all the details here, but let's put up crude just for a moment. I think we're in the May contract. I can't remember right now, but this is as an example, this is the yearly chart of crude. This is the semi-annual chart of crude. This is the quarterly chart of crude. And this is the monthly chart of crude. And this is the weekly chart of crude. So crude's in a really still very good position. There's really nothing wrong with crude's behavior here. Everything about what we've seen crude do is good behavior. So we're still, very interested in crude, the volatility, and we're somewhat, hesitant about taking on short positions even now. So thanks, Connie. Samuel's here and he says, thank you. Also wondering if you have an opinion on May wheat. I don't even look at wheat. I'm overloaded with the markets that I have, Samuel. And even if I wanted to look at it, I hate giving out super generalities like I have to here in this meeting for most of the time. I really want to give something that really says this is what is distinctly going to happen. And I'm not able to do that with wheat because we don't follow it and we don't have a lot of people interested in trading in wheat. Most people are interested in trading in markets that trade well on the intraday, which wheat does not. Now, it may trade well for you on the intraday, but most people are not looking for intraday swings in wheat, and therefore they have to hold longer term, and most people are uncomfortable holding longer term positions in futures. It's just hard for people to do. So that's why we just don't have any call for it. I wish, I don't even wish that we did have a call for it because we're overloaded on the markets that we're forecasting in now. So thanks, Samuel. Joseph's here and he says, today I saw a $7 gasoline price in Los Angeles. Yeah, there's places in Los Angeles that are a little distant from the central city that are up at $8.50 and $9 that my son reported to me and showed me the sign. Those are places that are kind of going away. They're sort of a little more remote, and they can pretty much charge whatever they want out there. So there you go. When I look at Los Angeles and I look at the tremendously poor management, I mean, it's just poor at any way you want to measure it, how terribly Los Angeles has been managed and how it still is in business. The fact is that it is terribly managed, horribly managed, pitifully, and yet they're still there. There is a price to pay for really bad management decisions of a state. And now California is no small state. It's the largest, and it is probably should have been broken up so it could be managed much better. But it is a really probably difficult job, but that isn't an excuse to manage it poorly. And it just really is. It's just been a terrible thing for California. And I say that having grown up in California. And when I was in California, it was sweet. I remember beautiful times and there was politics back then and so on. But over the years, watching California make decisions about major things and how they manage the finances and how they manage the homeless, and the list just goes on and on. They've just done a really bad job. I'd love to, not really, hear somebody defending what California has done, how they've managed themselves, because I mean, the decisions are so not even junior high school based. I mean, they're elementary school bad decisions that they keep making over and over again. At some point, it's going to come home to roost, unfortunately. Even the really well-managed cities will have their drawdowns and things will happen. I mean, if I may, I happen to live in Las Vegas. Las Vegas is a particularly well-managed city. We don't run out of money. We don't have deficits. We don't have, if we need new freeways, we do the things to build the freeway. We sell bonds. We buy, we pay those off. Las Vegas, if you look at it, there's just been a very well-managed city for a long time. There's probably cities that do it even better, but Los Angeles is just about the worst. They manage their school district the worst. They manage just about everything they touch the worst. So too bad for California, because it's strange. it is really one of the prettiest states. And there's other pretty states, but California is particularly beautiful. I mean, even amazingly beautiful. And but it hasn't been managed well, and it's just too bad. So yeah, $7, I don't blame Los Angeles for the $7 gas prices, but there's other places for blame for that as well. I mean, not to get political, but this current administration is really at war with the oil, gas, and coal industry. And I am totally on board with wanting to switch over and have the world switch over to electric. It's just not there yet. It's not ready to be switched over. The infrastructure's not even there. You can't just flip a switch and have that happen. And this administration, by certain actions, has been certainly, partly, absolutely, by any standard, sober view, partly to blame for the inflationary aspect of gasoline prices alone, to say nothing of inflation. So it's just, bad management. You just, anybody that looks at some of the decisions they've made and wants to say they're good, they're just defending for defending's sake. There are much better ways to handle things. Many of the decisions that you would make in your personal life that would benefit you, you would never think of doing the opposite of that. You would say, no, that would be really bad. That's the kind of decisions we see California making. It's like, what? How could you be making that decision to do this? And it usually doesn't turn out well. Anyway, do you think the February low will be taken, Richard says, out before the January 4th all-time high is taken out, keeping the bull market intact? Thoughts? We do have a forecast, which I can't give here, that relates to the market and where it's going to be in the third quarter of this year. So we have a forecast for where the S&P, the price that the S&P will trade at in the third quarter of this year. That price, if they were to exceed it by a certain amount, even if they did break to new highs, let's just say they did, that would not alter our forecast for the first 6 months of next year or the second 6 months of next year for a very specific price on the downside for the market to be. So I can't give it all out. I've given as much as I could give right there, but it is relatable to your question about where they're going to be in 2023. So I hope you can read between the lines there, Richard, a little bit. Thank you. Rob is here and he says, that's 2 people now really interested in wheat. Maybe we can get 3. Yeah, that's funny. Listen, wheat is a beautiful market. It's just a very, very different market than most of the markets that people that are trading intraday, which most of our subscribers do. We do have longer term people that specifically want longer term indications. They want to be in for a month or 3 months towards a much, much larger target. They're much more comfortable doing that. That's how you have to trade wheat, in my opinion. Samuel's here and he says, yes, there have been incredibly foolish hydrocarbon policies in Western countries. You wonder if there's enough economically feasible oil in the world that could be why they have discouraged using it. No, it has no. Yeah, they haven't. It's not a thoughtful decision that they've made to, stop drilling oil and so on. They've made these decisions because it's a virtue signaling decision. That's why they're making them. The 2 previous administrations ago, the Obama administration did attempt to light up the green economy. The green economy is a big thing, and it fails miserably because all the pieces have to kind of be in play for that to happen. Even Elon Musk, the head of the largest electric car company in the world and the most successful electric car company in the world, amongst other most successful companies that he runs, has himself told Joe Biden, you need to encourage more drilling and we have to get back to getting our own oil until all the other things are in place so that we can have a real switch over to the green economy. You can't just snap your fingers and say it's ready to go. If you went out and bought an electric car today, or if 10,000 people buy an electric car today, there still isn't an infrastructure of charging stations, even though they're building them at a very rapid pace. It's going to be a decade or more before the United States has charging stations in enough places that you could be driving anywhere and get your car charged. if that's how things will, if that's how the technology will still be at that time, and it probably will be. It's going to be a long time. I've told you, full self-driving of cars. A couple of years ago, I told you it's going to be at least a decade before we have anything remotely like full self-driving cars. It might even be 25 years before that. I'm happy they're working on it, but you wouldn't be able to step in and say, okay, everybody buy a level 2 driving car and take your hands off the wheel, but just occasionally check it, because we're all just switching over to, you can't do that. All the pieces have to be there, and the pieces aren't there yet. And if they're not there, we need to be able to provide energy for the United States, even if you don't like oil, which who does, right? But you got to have something there to keep us intact. Now, instead of that, we're begging other countries for their oil, which is not a good position to be in. Samuel says, all for the green Greta thing. Indeed, exactly. It's all a great idea, and it'll eventually be here, but you can't flip a switch and make it happen. And we've seen the Obama administration and this administration try to do that, both times with really disastrous results. It will come on its own. It will be obvious. The horse and carriage used to be the way that people got around. They had to pay the driver to drive them around in their horse and carriage. And then Henry Ford came along, and people drove horses and carriages for a really, really, really long time before the switchover really took place. Henry Ford was building the Model T and the Edsel and all his other little cars for a long, long, long time before horses and carriages disappeared. If the president had said, we're switching over to cars, everybody get rid of your horses and carriages, it wouldn't have worked, and it didn't work. Wouldn't have worked, and for the same reasons. There just has to be an infrastructure there to accommodate all that. We're just not there yet. Richard's here, and he said, but I do want to say natural electric cars are just a blast, and you mostly charge them at your house. Most of those cars you're not going to be taking on super long trips. There are spotty, electric car charging stations across the country, but many of them don't work. The whole thing has at least a decade before we're going to be ready. We have a decade of continued oil use at least before electric cars are really ready for the big switchover. Richard Journey says the natural year begins March 20th, 21st, and ends its first month on April 19th. This range should be important resistance support levels to watch. Food for thought. Yeah, there's several different ways to think about the natural year. A little deeper is the one that you've talked about, where you use the March 20th and 21st time frame to spring to start the new year. And that is how I think of it actually as well. So it is important. And one of the reasons that you need a quarterly chart, if you're using a platform that doesn't have a quarterly chart, I don't know why you would use that platform. You got to get a platform that has a quarterly chart. I don't know why somebody would sell a platform for traders that doesn't have a quarterly chart on it, or a semi-annual, or a yearly, or or any of that stuff. So you got to have that. But yes, the range would be important resistance support levels to watch, and so on. There's many, many ways to think about how markets work. And no matter which way you use, there's only a small chance that you'll end up with 1% of the total truth. If you can get close to that, you actually can get way ahead, because the truth is so powerful, as I've said before, that even having 1% of it does things that 100% of falsehood couldn't do. So we do want to try to understand the nature of markets, and they are a form of energetic movement. They're not driven the way that people think of them. As I've said before, everything exists and has truths at its own level, but only at that level. When you go deeper, that truth is evaporated and a deeper truth emerges. This is exactly what science has found. So when people, say, oh, this is how something operates, that may be very true at that level. But later, if you're a person that by luck or by work, you find a deeper level, you realize that that isn't at all true. It's only true when you're viewing it from that level. There's deeper things about the market as well. So, and when you know those things, you start asking better questions, obviously, about the market. If somebody tells you something is true about something, and you can see on that level that it is true, all of your questions are going to be relative to that level's truth. All of your queries about trying to figure something out or whatever are going to be relative to that level. You literally have to take a jump to another level to then see the previous level pretty much as an abstraction, and that the new level, there's a deeper truth. And yes, that truth is also going to be eviscerated when you jump to the next level. And a person could say, well, then what's the final truth? And the final truth is that nothing exists. That's the final truth. All of this is a play of levels of reality and so on. And I'll just leave that. I won't say that, you'll have to believe what I'm telling you, but science is going to dig down to the very core, and they're going to find that there's just nothing. That's what they're going to find. That's my prediction for science. They're going level by level by level. And when they finally get to the bottom to see the golden egg, there's nothing there. And yet all of this is still in play. So yeah, it is all about levels. And that is certainly part of the 1% truth that I've understood. So listen, I'm going to leave it to you with that. I hope you enjoyed the week. I hope you did decently. It should be very interesting how these markets work out over the next just 2 days. It's going to be very interesting. I think you'll be very pleased if you're trading in the markets on Monday and Tuesday because of the volatility. And I hope all of you stay well and are well. And I'll see you here on Monday. Have a great weekend. See you then.